Good afternoon and welcome to Asians with Same Midday Market Watch. I'm Samantha Boone, and let's start with taking a look at the summary of the market action. So, Asian stock traded in a narrow range on Tuesday as investors remain cautious ahead of the speech by Fed Reserve Chair Jerome Powell. Regional markets followed a slightly positive close on Wall Street, with tech stock being the standout performer. In the U.S. stock futures edged lower in Asian trading hours as investors await a series of interest rate related events this week. Powell is scheduled to speak at a European Central Bank event on Tuesday, while the minutes from the Fed's June meeting will be released on Wednesday. And the key US employment data, including the non farming payrolls, is also due later this week. In China, the Chinese stock traded modestly higher on Tuesday, with the Shanghai Shenzhen CSI 300 and Shanghai Composite Indexes posting slight gains. However, these indexes had suffered significant losses in June as optimism over China's economic recovery faded. In Hong Kong, the Hang Seng Index rebounded after a public holiday on Monday yesterday, rising 1.5%. The gains were driven by strong performance in local tech heavyweights, which tracked the upbeat sentiments in their US counterparts. Positive private sector purchasing managers index, the PMI data, released earlier this week, helped boost confidence in the Chinese economy, and additionally, an improvement in home sales as provided support. Nevertheless, official PMI figures released over the weekend painted a less rosy picture, indicating that China's manufacturing sector contracted for a second consecutive month. In Australia, this Australian stocks fell on Tuesday after release of hawkish minutes from the Reserve Bank of Australia, the RBA's June meeting. The ASX 200 index declined 0.4% as the central bank policymakers revealed they had considered raising interest rates in July by 25 basis points to 4.35%. The RBA minutes showed that Australian inflation had exceeded expectations for three consecutive months and remained well above the central bank's target range. The UBS analysis noted that if this trend continues, it could prompt the RBA to hike rates by another 25 basis points in August. Over in Japan, the stocks traded in a narrow range on Tuesday, with the Nikkei 225 rising 0.3% and the Topix adding 0.8%. The Topix index reached a new over 30-year high as investors bet the Japanese weak economy would prevent the Bank of Japan from aggressively tightening monetary policy. In South Korea, the Kospi index fell 0.6%, despite data showing an unexpected easing of consumer price inflation in the country in June. Over in India, the stocks remained at record highs, with the Nifty 50 index futures pointing to a slightly negative open as investors anticipated some profit taking after the index reached a series of new peaks in June. The optimism over India's economy, with the ruling JBP party poised for a third term in power, had driven the Nifty and the BSE Sensex 30 to a new all-time highs. The Nifty was up 11% so far in 2024, and analysts expect further gains on the back of India's resilient performance. So, to give insight to the markets today, we have Kaywen Petersen, a principal and part of the executive team at HODL Group of Ascent Capital and Final Upgrade. Kay, welcome to the show.
Always awesome to be on. Talk all things macro, crypto, and cross assets. So let's go.
Yes, good to see you again. So we're about to head into a summer in the Northern Hemisphere, right? What are your thoughts as we embark on the second half of the year from a macro perspective, Kay?
Yeah, so the Southern Hemisphere is, of course, still putting in the work, but we all know in the North, 4th of July is coming through in the US. And by the time back end of July, August, Europe, we all know it tends to be out. It's probably going to be a lot lower liquidity, just general in markets, as is historically the case. I could see a scenario where we continue to melt up, equities, especially in the US, are still pretty much close to kind of all-time highs. But the key focus really when people look towards the second half of the year is going to be on two things. One is, of course, the Fed. Are they going to move this year? And if so, when? And of course, the US November elections, which I think is maybe even more interesting and more important. And with the Fed, there's about a 60% probability that they're going to be cutting in September. And if you look all the way towards the November and the December meetings, there's actually only a 6% probability in the November meetings that they're actually not going to move and cut this year. So that kind of tells you where the market is light or laying, if you will. I do think that's maybe mispriced. There's definitely a scenario where we don't see any rate cuts from the Fed. But I think the US November elections is the key thing. And Samantha, we may already see price action about 3 months leading into that. So already from maybe August, the market may try to anticipate what that means for risk assets.
Hmm. And what does that mean for, the digital asset space? Okay.
Well, crypto really now is looking at all things macro. There's a pretty big divergence in crypto, whereas we've continued to see U.S. equities from lower left to upper right continue unstopped. Whether you want to call it only one company or two companies leading it, it doesn't matter. S&P is going up higher, the Nasdaq's going up higher. Crypto has definitely lost a lot of the momentum, as we were talking about kind of last time. From tail end of last year, October to end of the first quarter is pretty much a lower left to upper right scenario. So no doubt there's still quite a bit of chop. We're at these low 60 levels, which are very, very important for Bitcoin. And we probably won't be really getting more of a signal for the crypto space until the macro environment really starts to take a little bit more of a turn, or the focus turns on the US elections in maybe a more positive way, with maybe a Trump presidency where he's alluded to being very, very pro crypto.
Yes, we love to see that happen. So we seem to be seeing a different narrative from a global monetary policy between the Fed and the ECB that recently cut, the RBA, who have flagged that inflation is high and so on.
Yeah.
So how should investors think about this in general? What do you think?
Yeah, so you already given the overview of this, like with the RBA basically showing that inflation is still coming in hot. What's interesting from a global macro perspective is when you get that divergence, right? So we've seen the ECB cut, but they don't seem to be embarking on a cutting regime, right? It seemed to be the hawkish cut, if you will. We're still waiting on the Fed, which has been, on the hold. But I think there you could safely say even in the worst case scenario of one or two more hikes, which is very contrarian, there is no more hiking regime. So it's really a question of when they start. But then you have places like the RBA in Australia, which, could be, done with the cuts. And that could be a very interesting regime, let's say for, currencies that have a strong kind of commodity bias and maybe a more hawkish kind of monetary bias. So that's definitely something I'd be watching out for from a macro perspective, because you want to ride those divergent trends, and sometimes they can run for 6, 12, 18, 24 months and can be super kind of profitable. So if you're expecting the Fed to eventually cut a weaker US dollar, then things that are long Aussie denominated could be of quite a bit of interest, right, in this divergent monetary policy background.
Hmm. Okay, so let's switch over to Japan a bit because you mentioned this off line earlier. So we keep seeing calls across the board for a normalization of the monetary policy. Maybe you can share a bit about what's happening over there.
Yeah, so Japan is a very interesting experiment, as we've been seeing in a lot of the world, but it's kind of the end game. And we have a chart. I don't know if we could bring that up, that kind of really illustrates this. So a lot of people, especially in Asia, they've been traveling to Japan because obviously the yen has been getting cheaper. So what this chart shows here is basically, dollar yen from January 2021 to basically July. So that's about 3.5 years. And dollar yen's moved up about 60%, right? And bear in mind that's unlevered. So clearly, it's much easier and cheaper to vacation in the yen than was the case just a few years back. So this is a monthly chart, but let me show you what's even more interesting, Samantha. You go
Mhm.
back on this, and now we're back to 2008. Now we're back to early 2000. Like you have to go back literally to, we're talking about like the 89, 87 levels, right, is where we're about to break out. And from just a macro perspective and even from a chartist perspective, this is not a chart that you want to short. So despite all the calls of, reversal in the yen and yen strengthening and normalization of monetary policy in Japan, which is a whole different topic. Like, I think the more likely case is the trend continues, and I could see a 200 yen situation happening much, much sooner than most people think. And who knows if we're even going to go back to be retesting kind of 250. You've, of course, also had euro yen breaking up kind of higher. So, a lot of times in macro, when something's really, really hard to understand and explain, it continues on for much, much further. And for a lot of the people who are expecting this monetary normalization in Japan, my question would be how, right? They own a good chunk, if not, the majority of the bond market. They synthetically also own a whole bunch of equities, right? There's a lot of debt in the system, over 300%, debt to GDP. How do you normalize from that? It's basically impossible, right? Is my kind of viewpoint. So I think the yen, potentially is going to be continuing to weaken for much, much longer than people anticipate.
Okay, thanks for your insight on that. So before we close today's shows, do you have any thoughts you'd like to share with our viewers as we start the second half of the year?
Yeah, so I think on crypto is similar to what we were jamming on last week. Is we've been here many, many times. HODL on. We are still in the midst of a bull market. There's a great Coinbase tweet out there that I repeated that basically shows you that you go through, significant levels of drawdowns in it. In the yen, that has to have some consequences eventually to a renminbi, and I wouldn't be surprised if we do see some kind of weakening in the renminbi at some point. And for the rest, just keep a lookout for the US elections because it's going to get very interesting for risk assets as a whole.
Yes, it'll be quite a show. So thanks, Kate. Thanks for being on the show.
Always a pleasure. Thank you for having me, Samantha.
Right, this has been Vista Asian Midday Market Watch. I'm Samantha Woon, and this video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It will also be on our syndication partners' TV stations, radio stations, and website. Remember to like and subscribe. Thanks for tuning in.